Income Settlement Rules, or SS660, if you're geeky enough to want to go online and have a look at what the acronym all stands about. What does this mean? This is about sharing income between partners or other people. So if you had your own limited company, broadly speaking, let's say you're a contractor working for a bank in the UK, you've got one invoice a month, you've got a few expenses, and ultimately the money's being driven by you. So the cash is coming in here. HMRC would then suggest, depending on your status for R35, so let's assume you're outside R35 for now, the standard rules apply. You'll draw salary, you'll draw expenses, you'll draw dividend. Standard kind of model that we all know about, which is fine. So, if this is just you on your own, that's the model you would apply. If, however, you're thinking, well, I know there's ways to control my tax liability more, all my business friends and all the people that I know that own businesses are telling me my wife's on the payroll, I've got this amount going through for her, or my mum's doing this, or my dad's doing this. As long as they're doing something, the answer is yes, they can become part of the company. It's dangerous to add them in just for the sake of it without them having any involvement at all. And that's why these rules apply. So let's now morph this across here. If you have the same model, you may have a number of layers with a lot of people on the salary. Then the same rules apply for dividends and expenses. Income settlement rules here are really sort of hinged around you, Mr. and Mrs. or Mr. and Mrs. and Mr. And trying to prove and determine that you haven't done this purely to conspire to reduce your tax liability. So again, as long as you have a contract of employment, a defined set of working environment rules, a set income if they're doing a set daily number of chores or hours, and something real that can stand the test of time, then you're in a position that you can start to pay other people through the company. If you are asked to present this information to HMRC, they will be seeking to understand what value that person brought to the business. And by just saying, look, I'll have 50% dividends to my wife and 50% salary to my wife, so you're sharing the income entirely, it's unrealistic to think that's going to be something that the HMRC would allow. Because they, again, depending on the other party, they're providing a service to you to help you run your company. They're not providing a service direct to an end client, in this example, to try and generate more revenue. So being more realistic, choose a salary that is in line with the day-to-day function, admin, processing, doing some day-to-day accounting. Choose something sensible, 15, 20, £25 an hour. And again, for dividends, if you're thinking of giving them a profit share, which you can do for employees and or other parties that are involved in the company, think logically again. 50-50 is not sensible, just as they're part of the company and they're your wife, and you can save a bit of tax. I would always recommend it, even as long as it's responsible and sensibly well thought through. Think about sort of 90-10, 80-20, no more than 70-30, unless they're a revenue generating person who's bringing money into the business to contribute pounds, shilling and pence at the top line. That's the income settlement.